how does tax come into the equation?
Good morning, everyone, and thank you for joining us. In our panel, we're speaking about tax and how does tax feature in all of this? How is tax in the gaming industry? Is it a driver? Are we at the driving seat? Is it an ancillary? Is it a complementary? So how does tax feature in all of this? The EU is keeping us busy. We have lots of new tax changes coming in. And our fellow tax colleagues who are in-house counsel have to keep up with all these changes and to convince their boards that tax is very important for every decision they make. So with me today, I have, as I said, two in-house counsel. I have Cristian from Superbet. He's the head of tax at Superbet. Amandus, Jabin, who is the global head of tax at Betsson. And I also have Peter Wilson, who will be discussing what should happen in the course of an investigation, a tax investigation. So my first question is for the in-house tax counsels. So we spoke about consolidation, lots of mergers and acquisition happening in this space, but also new markets. We're seeing that more and more gaming organizations are entering new markets. So how does tax feature in this? When your directors they come to you and they ask, we're going to this new market. How does tax feature in this? And what are the do's and don'ts? Maybe Amandus, we can start with you.
Do I get the opportunity to start? Hi, everyone. Thanks for watching on taxes as well. It's an area that perhaps sounds a little bit boring, but for everyone that's ever worked taxes or hasn't been trying to make a very profitable business, you know that taxes is an integral part of what one does in order to optimize the profit making in a business. So first question was, how does tax play in? And I guess it's a really broad question. For me, when I look at taxes, it's a super complex area, like every area is when you start getting into the details of it. But it's a bit unique since it has such an effect on bottom line profits for a company. And when I look at the tax teams that we have internally for us, I don't look at them primarily as tax experts, even though they are. They're part of they're co-architects for the structure or the strategy that we set for the company. And as such, they are helping to build the success of the company. They're helping to grow the company in many different ways. I would say that if one looks at what we can contribute, it's easy to do an example a little bit, or just think a little bit about where it plays in. So, for example, the difference between setting up a tax effective structure when you're running a business makes a huge difference. And it has a real impact in a business sense, because it allows you to grow faster than your competitors. And that in long term allows you to give better returns to your investors and your founders of the companies. So it's really a crucial part in working with the business to optimize it. If I look a little bit on the practical terms of what we do for the business when it comes to example a new market, I have the luxury in Betsson of having this question really highly prioritized. So when we look at new markets, tax is one of the first boxes you have to tick in order to even go further and assess the market. And from that perspective, there are many different parts to the equation, obviously, but it normally starts pretty standardized with the P&L. You look at the numbers and you try to understand, okay, what do we expect from this market? How big is it? What's the expected return on the market? And then you start factoring in things that are tax related. And when you look at tax related things, it's unique from the perspective that taxes are, if you look at a P&L, it's always fixed in a way. But understanding the parameters of tax allows you to perhaps change the underlying parameters of the business in a way which allows you to be more efficient from a P&L perspective. So we look at the most logical one in a gaming world here is obviously gaming taxes. And I mean, you can't change gaming taxes. Gaming taxes is, say, for example, you do the Swedish example. Right now, it's 18% tax in Sweden. It's always going to be 18% taxes unless they change it, which they're about to do now to 22. But so it's 18%. But understanding how that's built allows you a lot of possibilities. So you, for example, you can't go into a jurisdiction and have a growth strategy that's based on bonusing, for example, if you cannot deduct bonus cost. But understanding how that limitation in deduction rights for bonuses work allows you to potentially set up a business that can work within an acquisition model that allows you to work within the parameters of that tax law. So that's a practical example of it.
How important is it to find the right partners on the ground? Because tax changes, I mean, from Europe to Latin, there are so many different ways how to tax. Different digital tax, different GSTs, VAT, what deductions apply. So there are so many different ways how to tax. How important is it to find the right people on the ground to help you navigate? We're speaking about navigation.
It's absolutely crucial, of course, because we can only do so much in-house. We understand big parameters. We understand normally where it hits in the P&L. We understand what the legislator means when he says certain things. But you can't do that in a vacuum. You need to understand the culture. You need to understand the history of the legislation. So you need local experts to help guide you. But there's a big difference because by having this as such an integral part of your business, you roughly understand and you can roughly estimate things at a much higher level than you can without it. But you can never sort of go with a final version business case without having a very close relationship with someone that knows the market.
Cristian, do you experience the same when entering new markets? What do you think?
Absolutely, yes. And just to answer to your question, a very good local consultant makes the difference sometimes, yeah. As Amandus said earlier, at the end, everything is leading in P&L, before EBITDA or after EBITDA. And what can I add also is the fact more and more companies are paying attention also to the net profit and also to the tax it paid in jurisdiction. That's the difference versus the past when mainly EBITDA it was the most important KPI.
Okay, so it's challenging entering new markets, but it can also present new opportunities. So
for sure.
But to top all this up, there are new changes coming in Europe. So most of you might know that there is Pillar 2 coming in. Pillar 2 is the minimum tax, which is going to be applicable from 2024, January 2024. In Malta, we have new transfer pricing rules coming in. We have the reporting obligations, never ending, the DEC 6, and whatever, they're always increasing. We have the new ATED 3 proposed legislation, which is based on substance and how much substance companies should have in a particular country. So we have all these new challenges, new rules coming in. And this is only in Europe, because as I said, every continent, they have their new rules. So, Cristian, how difficult is it to, again, navigate through these new changes cross-border? And what's your strategy? How do you do this? And also, is there still a way of going for tax optimization, considering all these new changes?
Thank you, Ramona. If we make an analysis of the evolution in the global tax environments, we see a lot of changes in the last years which are impacting significantly the gaming industry. We see jurisdictions used for business in the past blacklisted by OECD. We see a lot of additional compliance obligations. We see changes in the local legislation in order to increase the level of taxation. and we see minimum level of corporate income tax for large multinational companies. More specifically, I will start with that 6, as you mentioned earlier, which introduced the obligation for companies and tax consultants to report any tax structure which is creating an advantage from corporate income tax perspective. That was a significant change, and I can let you know that in some jurisdictions, authorities are implementing the directive in a more restrictive way. So they are not referring only to the corporate income tax, they are regulating also the value-added tax, which is an additional burden for us.
And it's not only, so you mentioned DEC 6 and reporting, it's not only when there's a tax advantage. So that is the preset that we have to report when there is a tax advantage, but it's not always the case. Because when you have a transfer of assets, of all the assets of a company, sometimes there's not even a tax advantage, but you still have to report it.
And indeed, and just to add a bit, you don't need to report after implementation. You need to report when you start the discussions, when you are thinking to structure the business. I will continue with all these additional requirements regarding the substance. In every jurisdiction, we are facing more and more requirements regarding that. I will continue also with country-by-country report, which is a very heavy compliance obligation because you need to report all tax information for all jurisdictions for the entire group. And it's not only about to report, it's also about increasing the transparency, because after you are submitting this report, the information are available for all European tax authorities. At the end, I want to mention the Pillar 2, which has a very impact in some businesses for multinational large companies. Just because it's really setting a minimum tax, so doesn't matter where you have the business. If your effective tax rate is lower than 15%, you need to top up at the end of holding, and you need to pay some taxes. And just to point out here, maybe after implementation of Pillar 2, the companies which are operating through a Maltese entity will lose some benefits, and it's a significant impact.
How important is it? So let's speak about this. It's maybe the elephant in the room, right? So yes, if you qualify as a multinational and you fall within Pillar 2, your tax is going to change from an effective 5 to a 15. You, both gambling operators, are in Malta who had disadvantage now, and now it might go up to 15%. Would you still consider Malta as a viable option? Are there other things to consider?
I'll put it like this. Yes, Malta is still a viable option. Of course it is. I mean, it's become a mecca for online gambling. There's no doubt about that. The major benefit that Malta has historically had is that in every P&L or every discussion you do on profits, Malta has a clear benefit in having a fairly low final taxation for a foreign-owned company. Now that's no longer that clear. You can compare, like I'm Swedish, so if I compare it to Sweden, we have a corporate income tax of 20%, and that 5% difference isn't that big anymore. That's the downside for Malta. But yeah, of course, Malta is still a very attractive location based on...
But then again, when you speak about tax, you can't see only the income tax. You have to look at VAT, you have to look
Precisely. There's more to the equation,
deductions and everything.
Of course.
What do you think, Cristi? Do you agree with this comment?
I'm laughing because the VAT is the big pain of our industry. Yeah, being a VAT exempt industry, that it's creating a lot of troubles. But as Amandus mentioned earlier, Malta is still an option for our structures in order to obtain some advantages regarding VAT.
Peter, we turn to you.
Hello.
So Peter is an expert when it comes to tax investigations.
Yes.
Tell us a bit.
Okay.
How should the gaming operators prepare for a tax investigation? So as I see it, there are two ways. So one, one way, when you're structuring, I think we should all ask the question, is this structure bulletproof? So if the structure had to go in the hands of the revenue authorities, and most of them do now, thanks to DEC 6, or rulings we get from the revenue, they have access to all of this. So the first question we have to ask is, how do we create a bulletproof structure and make sure that if this had to end up in the hands of revenue, we're okay with this? And the second point is, if the tax authorities are investigating a gaming operator, a cross-border investigation, what should gaming operators do? How should they tackle this?
Okay. Well, first of all, I'll just explain. For too many years, I'm a lawyer. I've been advising gambling and tax investigation. They're two separate things I've done as a regulatory lawyer, but sometimes they cross over, and hopefully not too often, but when they do is with serious consequences. Now, to answer your 2 points, let me say this. To instill some 30 years experience into a 5-minute answer, I will say you need 3 things. So first of all, to cover the first point, you should have a risk assessment to assess the risk of a tax investigation. So that's not only looking at structures, that's looking at what subsidiaries are doing, what your agents, your suppliers are doing. It's looking at a number of different areas, and having a good risk assessment of a tax investigation is very useful. For instance, in the UK, we have a corporate offence of failure to prevent the facilitation of tax evasion. And the defence to that is the main reason for having a defence to that is to have reasonable procedures, and the first element of that is a risk assessment. But let me move on to the second part, the tax investigations. So I said the first thing you need is a risk assessment. Then you need 2 plans. You need one plan to cover generally the risk of tax investigations, and if they occur, and the second plan is if you get a dawn raid, you actually get a raid. So I'm talking, to give an example, I had a client who's a director of a company. They visited his house early in the morning. There were 15 officers, all dressed in black paramilitary gear, and they seized everything in his house, including his children's presents and Christmas cards. I mean, you can't necessarily plan for what's going to happen. You just need to be able to plan how to react to it. And to give you just a little snippet from the type of those plans. So tax investigation, you guys are sitting in your office, boring Monday afternoon, going through pillar requirements and compliance, and you get a letter come special delivery, and it demands the last 10 years of your tax returns, documents, bank statements, all sorts of documents. And it starts talking about allegations of tax evasion, money laundering, fraud, bribery, and it could be several years ago. And you think, well, I can't remember that. And it could be some agent you've used in Latin America. But then it threatens all sorts of things that you may end up going to prison. How do you respond to that? Well, first of all, you obviously need to call somebody like me or some other tax investigation specialist.
No adverts.
Sorry?
No adverts.
No, I didn't mean, sorry. I didn't mean to say, not me. You don't need to call me. Sorry, I'm not trying to advertise. Okay. Call somebody else who knows more than me. But what you need to do is you need to be able to have somebody objective come in and you need to say, do I need to respond to this? Is this a statutory requirement to deliver records, or can I refuse? Do I need more time so I don't need to be pushed? Can I challenge it? If it's a statutory requirement, can I challenge it? Should I ask for more information? Simple stuff, but people don't think of it. They panic and they hand over everything, and then they get in terrible trouble. So that's just a few tips. If you had somebody knock at your door and they're all standing there as a dawn raid, don't do like I had one client do. He had his They knocked at his Mayfair apartment, luxury apartment. His wife held them at the door, said, "Oh no, you need to hang on a second. My husband needs to get ready. He's just got up." And they were standing there for 10 minutes until they realised they could hear this whirring noise. He had 2 shredding machines going and was shredding as many documents as possible. Now, they burst in. They seized everything in this beautiful apartment it was in Mayfair, worth millions. And it didn't do him any good, because later on when I represented him, I had 1,000 documents all pieced together. So the lesson from that is get a better shredder. No, it's not. No, the lesson from that is, I'm sorry, I'm joking. You need to plan, you need to work out, you need to not have, well, first of all, you shouldn't make compromising documents. And you need to run your affairs properly, obviously, but you need to know how to control a raid. So a very quick tip from a raid. You tell me when I should stop talking, okay? Yeah. Very quick tip. Somebody turns up at your premises, they want to search your offices. First of all, ask their identity, check that. Check that it's proper. Check whether they've got a search warrant or what other power they've got to come in your property. Shadow them. Appoint somebody to shadow them. Make a note of everything they take. For God's sake, copy or note down what they take. If they take 1,000 records and then you're trying to work out, oh, we ought to do a counter-investigation. How do we respond to this? What have they got? I don't know. But all of our records are missing. Simple stuff. And so you should have somebody appointed in the organisation, a manager, who has the responsibility, and a manager and somebody else, because when that manager's on holiday, who has the responsibility, in the event you get a raid, there is a series of steps, and you know how to deal with it and how to manage it and how to lessen the impact. One sheet of paper, and it could save you, well,
what are you doing about this? Do you have this sheet of paper ready, or you invested in a big shredder?
We make sure we're early on in there, so we don't have the papers that we need to shred. No, I'm kidding. I mean, this is I've done this dawn raids myself. I used to work for the Swedish tax agency, so I recognize it. It's a real thing. It's a reality. And if you run your business in a way where you have that risk, and everyone has that risk, be aware of that, then you should definitely have a plan for how you deal with it when it happens. And I mean, first on mine is it's my version of you. That's just the reality of it. You have to have help. You can't do this in-house. You can't have the expertise sitting and waiting for this, but you can prep for it for sure. Yeah. And you can understand what material you have, where you have it, who has access to it, all of those things, which are absolutely crucial when something like this potentially happens.
And how important is it to document? So when you're structuring, you document the courses of how are you structuring and so on.
It's absolutely crucial, but one has to recognize that most of the time, it isn't a tax team that sits and sort of structures everything in detail. This is operations, it's running, and you just have to find clear enough processes in your day-to-day to actually pick these things up, make sure they're documented at least in some way, shape, or form, so you can support them in hindsight.
Can I ask you a question, Marcus? In your time as a tax inspector, which I hope you regret,
It was kind of fun, actually. Can I say that?
Well, there we are. Did you get everything right?
Do you mean did I know that the one I was coming after was most likely going to have something incriminating?
No. Did you find something incriminating every single time?
No.
Exactly.
We did not.
So therefore, you can't have a bulletproof tax structure to prevent a tax investigation, because quite often the tax authorities get it wrong.
You can be way off on what you believe has happened and what actually has happened when you see the documentation, for sure.
Cristian, what do you think?
I want to add one single thing, and that is related to the following. To document the structures, the transaction is not only responsibility of tax department, should be a joint and common effort of all the stakeholders in the organization. Yeah, because operations knows better than tax people how the things are running, how is better to support and to operate. So a common work together.
Okay. I think with this note, the takeaway points are prepare yourselves. Tax investigations are real. Post-COVID, we've seen tax authorities becoming more and more aggressive. So I think all the gaming operators should be prepared for cross-border investigations. Get your advisors on the ground who can help you with this and navigate through the new changes coming up in the tax world. Thank you very much for following us.